Buy-side incentives. Let's go back to Jerry Boyer, Joe Battipaglia, Don Bennett, and Dick Beauvais. Dick, it's possible that if we had looked at this TARP thing in the first place and realized that banks could do it alone with the upward-sloping yield curve, as you say, the cash-to-cash profits, the net interest margins, maybe we'll get some relief on the toxic asset accounting. Maybe we don't need to put another dime into it, Dick.
I definitely don't think that we need to, and I definitely don't think we should have put the original money in the first place. I think that the hysteria which has been generated by what I'm going to call the zombie senators arguing about nationalization of the industry, wiping out people's equity, putting at risk their debt, has created a fear factor within the industry, which then caused a number of people to pull back in terms of the funds that they would give the industry. That then required some action on the part of government. However, if the banks were left alone simply to work out their difficult loans on their own basis, on their own time span, we would not have had to put the money in.
Dick, looking at the story after this week's humongous rally, okay, the group is up 40% as a whole, or almost 40%. You got two or three choices you'd care to talk about?
Yeah, there's a lot of banks that I think are worth buying. I think Bank of America is worth buying because it is the American economy. One out of every $9 in deposits in the United States. Wells Fargo, U.S. Bank Corp, PNC Financial. These are all companies which have, in my view, strong earnings potential and market share gain capability, and I think they're going to be superb stocks.
All right, let me go to Dawn. Dawn, you're still in the gold play, is that correct?
Still in the gold play.
You're looking for inflation in every drawer and every trash can.
Absolutely.
Right.
And also,
import prices are now down 13% year on year, today's report, but you still see inflation.
I still see it. It's in the future. Listen,
consumer prices are zero.
When you do quantitative easing, you have inflation, period. When you print money at the rate we're doing, you have inflation. Coupled with the fact, I think it's fascinating, Premier of China. My guess is if they don't purchase treasuries, that they might go back to the gold markets, because that is international currency. Remember, gold isn't trading as a commodity anymore. It's more as if it's a currency.
Freeport-McMoRan up 9% this week. You staying with it?
Staying with it.
And what about other metals and mining? Because industrials had a nice move this week, as did raw materials in general.
You know what? If they're in that particular area, whether they manufacture it, whether they produce it, you should take a look at it as long as their balance sheets are healthy and they've got good management.
Joe Battipaglia, you don't like this optimism. I was going to ask you, Matt Nesto earlier in the program cited some technicians that were looking for a minimum 12% from here, 850 on the S&P 500. The S&P closed today at 757. Joe, what do you do here then, given your pessimism? What do you do?
Well, we had dropped 25% year-to-date until we came to this week, so it doesn't surprise me that we had such compression that you'd get a rally. And we've had, I think it was 14 different times where you had 4% rallies in a day that all faded in the last 12 months. But I will say to you that we are in the late stages of a bear market, and you have to look for opportunity as it comes. But unfortunately, the headwinds are recession, more write-offs in commercial real estate, and then the corporate debt market. The European community is coming unraveled, and the Far East is dead in the water as far as economic activity is concerned. Having said that, to your point about bonds, Larry, while treasuries are unappealing, municipals and corporates are very appealing. Because I think instead of inflation, we're going to have more deflation, in which case the rate of return on bonds, given the risk with default and so forth, quality bonds will give you a very healthy rate of return for the next several years.
Jerry Boyer, you still like the municipal bond, tax-free bond play?
I don't know. After hearing Joe talk, I like the Prozac play. That's pretty depressing. Yeah, Muni's my favorite asset class, but I'm starting to like tech in terms of equities. I think that's a real... As we're coming into this recovery, I think we're going to not hire up a lot, so we're going to need more productivity. So I like technology. I like commodities. Buy them on the buy them on the dips. I like real estate as an asset class too, as the credit markets heal.
All right, we're going to have to leave it there. Thank you, everybody. Jerry Boyer, Joe Battipaglia, Don Bennett, and Dick Beauvais. Coming up, are American Treasury bonds safe? The Chinese do not think so. The Kudlow report will discuss this right after this brief commercial capital.